where you have seen choppiness continue, especially for the crude oil prices. The going has been quite good. You have seen crude oil prices trading at around 1 week highs. That is gold and silver on your screens. Gold and silver prices especially have declined quite sharply in last 24 hours actually. $1,200 also saw a breach in the few minutes back. It's trading 1% on the lower side. It's the lowest level since last 6 months coming in for the gold prices. Silver in the meanwhile also trading more than 2% on the weaker side. It's the same clue in the Indian markets as well, where you have seen sharp declines coming in for the Indian prices, where gold prices are trading nearly 400 rupees down and the silver price is also down more than 1,000 rupees. On your screens, nearly 1,500 rupees down and coming in for that space. 44,000 has been broken below yet again. Let's get in then. T Gnanasekar, he's Director Commtrendz Research and Fund Management, and he joins us live on the show. Mr. Gnanasekar, hi, welcome. Let's start with gold first, and the kind of decline that we have seen, not completely unprecedented. That's the knee-jerk reaction to the Fed tapering. But from these current levels, what is your sense?
Actually, I'm quite, surprised that it's not reacted that much. Otherwise, it would have reacted for a tapering of $10 billion. But the fact that gold prices have already factored in this particular tapering news is very clear in the prices. But at the same time, technically there is no reason to sort of hint that prices are going to reverse from here, or there is going to be support for gold. It is looking weak at this point in time. Maybe it could go even lower towards 1175 or 1145 thereabouts in the international markets. That's a potential target area where gold is being targeted at this point in time. But to me, once it reaches those levels, I think what markets tend to forget is that fundamentally it becomes very bad for the miners to mine gold, and therefore you'll have a fundamental problem. You'll have supply issues coming in. That would start supporting gold. So our feeling is that just for intraday and short term, I think one can sell it clearly on any rallies from here. But you need to be very cautious once it reaches 1175 to 1150 levels. I think we could see a potential bottom there.
Also, how would you look at the silver prices? That, of course, is the more volatile of the lot, and we have seen 45,000 breach on the lower side as well. How much of a further decline do you see here? And would you also be in the camp where people feel that silver perhaps may outperform gold when we come back into a rally here?
Absolutely. There is no doubt that silver will continue to outperform gold going forward. The ratio clearly is favorable to silver. And also the kind of demand, industrial demand which silver has, gold definitely doesn't have that much of industrial demand compared to silver. So clearly going forward, I think silver would outperform. But at this point in time, I think we are working with targets near 41,500 to 42,000. I think 42,000 thereabouts should be a very strong support for silver. And it poses clear long-term opportunities to start buying around those levels. With a long-term horizon, of course, not for the short term, but intraday basis and for the next couple of days, I think it's a sell on rallies. Any rally to 44,500, 44,800, 45,000 is clearly a sell for a target of 43,000.
Let's talk about the energy space as well, because that's one area which has seen a positive December, positive 2013 also in some sense coming in. But with the Fed tapering, what kind of an impact do you see on that? And also with the shale gas, a lot of people are now getting slightly bearish into this sector too.
Crude, to me, technically doesn't look like it's having a lot of downside, though fundamentally there is a lot of supply pressure. I think US, the shale, market is aware of the shale supplies, and the reserves are also increasing, which we've seen lately in the last 3 to 6 months. But technically, it doesn't look like that. It looks like it might further go up. One of the main reasons, I guess, is the way the US economy is performed. And that sort of clearly indicates that that it could result in higher demand for crude, which is one of the reasons why crude is holding on and might even inch higher. So purely on that basis, I think we would, for the very short term, look to buy it on dips from here because of this, Fed tapering. not actually tapering, but the clear signal behind it is that the US economy is recovering. So that's going to bolster crude and also base metals both. So we would buy it anywhere closer to 6,100 for a target of 6,225.
To the base metals then, and as you pointed out, it's been strong recovery in US. The manufacturing activity has picked up not just in US but in China and Europe to some extent as well, and that should take the raw material demand on the higher side, as has been evident because we've seen the US inventories, LME inventories, Shanghai inventories also decline in the past couple of months. How much of a further upside, depending on these fundamentals, would you look at in copper prices then?
I think the recovery in China and the US economy recovery is going to result in higher consumption for copper. There's no doubt about that. And in fact, the base metals could follow suit simply because the Fed decision sort of signals a confidence in the US economy. That would result definitely in higher consumption for base metals. That's one of the reasons why, despite the tapering, which would result in higher dollar or a dollar which is becoming stronger and therefore depressing commodity prices, has on the other hand supported copper prices because of the pure economic. So I think these are the two metals which going forward are looking quite good, which is copper and crude. So we would certainly look at it not only as a short term, but there is even potential for copper to look at it in the medium term. So any dips can be bought. I think we're looking at short term targets of 470, 75 and a possible medium term target of 495.